Well, here we are. Boy, we're just about ate up a whole semester. I'm gonna try to get you through this week and next week too, probably. Okay, we've actually come a long ways, and I'm proud of most of you, and probably some of you that might not be feeling all that good about your efforts. I do feel a little bit of pride that you hopefully picked up a little bit about good and accurate record keeping and the importance of what that entails. I mean, and what you'll be able to use them for. And the big thing is that you got to know, you got to have accurate records in order to assess your break evens, to grow your profits. You have to know where you're at now in order to increase those margins, and then in order to plan and project those kinds of things. The three different statements that we put together do a pretty good job of telling a story if you've got to tell it to somebody else. But more important than anything else is that you're able to tell it to yourself, so that you can take and use it for self-assessment. I was just watching a wrestling match today, and one of the great things about wrestling, and I'm an old wrestler, so I'm a little bit biased that way. Maybe a few of you are too. I kind of look at rodeo as a sport and a business that is very, very similar to that. That you have your individual events in, and you prove yourself every time you get out there in the arena. Well, when you get on the mat, it's just you against the other person, and you can look at it a couple of different ways. When you hit about 60, you look back and you go, boy, if I can just get a little bit better, if I can incrementally increase my amplitude and my endurance and my skill level and that sort of thing, then I can do better out on the mat. And when you've got a team of people that you're pushing in a business like this, how you do things as an individual counts too. And that counts in the rodeo arena, whether you're on the rough stock side of things or the timed events. And then again, the wrestling kind of analogy comes to the forefront for me. But your individual effort actually it contributes to the team. And if you can get a little bit better with record keeping, if you can keep a little bit more accurate records, if you can push yourself just a little harder, if you can take that natural curiosity that God gave us and push yourself to be the best that you can be, it opens up a huge world to each and every one of us. And self-competition is where it's really at. It's not about whether you can be better at it than your neighbor or the neighbor in the county next to you or anything like that. Or that person that's up next in the box after you are. It's about, can I improve? And that's life. That's what life is all about. Anyway, I digress. This week, I'm going to give you the opportunity to kind of research some things. I'm not going to spoon feed you, and I don't think of that in a negative sense, but I pulled up some research on the internet, and they're directly tied, so they're accurate, back to the IRS code. Okay, we've been talking about depreciation, taxes, and that sort of thing. But to be more specific, how can I manage this thing? And how can I manage it so that one line item on my income statement that says taxes, federal taxes, maybe if we're specifically talking about them, how can I manage those so that I can actually pay less and do it in a legal way? There's many, many ways to take advantage of the tax code, and the government actually allows for it. They encourage it. So I'm not getting away with anything. It's just like, if you just if you just do a little bit of research, if you do a little bit of planning, then you can actually have an effect on that line item on your income statement. And then it can translate hugely to the bottom line or the profit part of the business. And this is one that I think, at least some, maybe not all, of course, but I hate to stereotype too much, but many people just don't take advantage of it because they just have this idea that they're bad at taxes. It's kind of like being bad at math, okay? It's not rocket science, okay? I know that the IRS has enough code and regulation to fill up a huge building, but what pertains to you is just a small amount. You just got to go in there and find what you're looking for. You're looking for those gold nuggets. So that's what it takes. It takes that curiosity, and it's not that hard. If a guy like me can research some of this stuff or can ask the right questions, then you're going to be successful in it. I know that. I've worked with many of you, and I know that you're probably a lot smarter than I am. At least I'm giving you that much credit, okay? So anyway, we've talked about tax depreciation. Well, no, we've talked about management depreciation, and we said, well, there's two main methods that I would use. The first one is straight line, and the advantage is it's just simple. It's just a flat rate. Every single year you depreciate the same way. And if you're going to own a piece of equipment or an asset over the entire useful life, it probably doesn't mean that much that you take an accelerated depreciation method and match it up with that asset. Okay? And I'm all about, as I keep on impressing upon you, to be as simple as possible and only make it more sophisticated when you need to, because life's just too short for that kind of stuff. So I employ straight line depreciation in most of the assets that I buy, because I know as an outfitter or as a rancher, most of the time we're going to buy a piece of equipment and we're probably going to just absolutely use that thing up. Just think of the old pickup truck. It's probably in the draw that was used up last time, and you went out and you got a newer pickup or a new pickup in order to replace it. So whether or not you depreciate it in a more accelerated method like double declining balance or 1.5 declining balance doesn't make a whole lot of difference on that type of a depreciation schedule. Okay, so think of those kinds of things. Spreadsheets, since their advent, I've actually been using them since the late 80s, and it enables us to keep track of those kinds of things in a real simplistic way. And then I can also do some what ifs. What if I accelerated the depreciation on this asset versus just use straight line? Both are acceptable. We have to choose at the beginning of that asset's life within our business what method we're going to use and that sort of thing. And one might apply better to a particular asset than over another one. The tax implications is that at the end of the year, and I'm talking about, we start thinking about what we're going to do with our taxes. Usually by October, no longer than November, we know if are we going to just slide through and make a little profit? Maybe we're going to slide through and make just we're just going to lose a little, or we're right in that little thing. Are we going to make a huge amount or more than we're typically getting out of this particular business? Well, if you really think about it, the only time you really need to manage taxes intensely is if you make a profit, because we want to cut back on the amount that we will have as our federal and state income taxes. So that's the time that we really scrutinize the thing. And one of the things is, most cow-calf operations, and this is the average, I'm thinking that you're not going to be one of the average, but most cow-calf operations have 2 profitable years. It doesn't say highly profitable, it just says profitable years in 10, okay? I want you to flip that. There are some operations out there that 8 out of 10 years, they're actually profitable. And I know a couple of them that are actually profitable every single year. Maybe 1 in 25 they're not. How about that? Isn't that kind of exciting? That's fun. That's having fun in business. It's not easy, but it's worth it. Okay? And then once you gain a level of profitability, you go, how can I can manage my my inputs to this particular enterprise or this particular business. How can I double that profit? Maybe I'm at 2% of gross sales. How can I? It's not that much of a stretch to go from 2 to 4, from 4 to 8 to 10% or 20%, because there are some businesses in your line that are actually doing that kind of thing. And it just takes doing the pencil work. It takes actually doing some what ifs. It takes some management and that sort of thing. And this is one thing you have control of, is how much tax the federal government and the state governments allow you, or you allow yourself to pay. It's cool. It's fun. Okay? I don't get all excited about this. So here's some resources I want you to do it just like I can't manage your time. You might wait till next week. Okay, I'm not gonna be your teacher this week. Here's some applicable articles on taxes that would apply to a small business. Okay, and tax depreciation, you can use straight line, or you can use a declining balance at a rate of 2 or 1.5. Okay, that's the whole MACRS thing. Modified accelerated recovery methods. Okay, that's the same as declining balance. The government just likes to call it something else. All right, that's all. If you get that, then you've already covered that. You know what it does. All right, so 179 is the depreciation that the government allows you to take. Actually, in 2019, we get to take up to $1 million of write-off deductions against any income for our businesses within the calendar year 2019. So, I mean, most of the ranches that I've worked with and worked on and actually run actually don't make $1 million. They don't have enough to write off $1 million. So, I mean, I can actually pretty easily, most of the time, unless I just have 5,000 to 10,000 mother cows, and it's highly profitable and prices are going my way and that sort of thing, have a problem with writing off that much if it's more than $1 million. Then we can also use bonus depreciation in order to write off another up to $2.5 million. So here's the government is saying, you can be highly profitable, up to $3.5 million, and we'll let you write it off this year. Wow. Now there's some ramifications to that. Okay, if you write it off this year, you can't use that against your income for next year or the years to come. There's also some qualifications, say on the bonus depreciation, that you actually can carry losses using bonus depreciation forward. Okay, so I mean, that's the kind of thing I want you to kind of key in on. If it was me and I had these articles that were given to me, or I actually had to go out and research them like I did, well, I'd be sitting there with a big old highlighter, and I'd be highlighting the things that were important to me on this thing. What is this 179 deduction? A section 179 calculator. I'm going to just do some what ifs with that and see where I end up. What's the implications? How's that going to affect my tax picture? Okay, so those are the things that I want you to do. I print them off and highlight the parts that would be important to you, that just stick out. And I brought up some really general articles. They're really well written. And maybe what I wanted to do was actually just to show you that it's pretty simple. It's pretty simple. If you're already profitable, to be even more profitable when we show our books to the government. Okay? So, and in a very legal sense, I never want to step to, I don't want to be looking over my shoulder when it comes to the IRS. They got a big hammer, and they'll use it if they need to. And maybe the chances of you being audited are very slim. They are actually very, very slim, but that's no reason that I don't pay my fair share, because they're encouraging me not to pay them in a lot of cases. So why wouldn't I take advantage of those things? I can pay my help more, I can pay myself more, I can treat my family better, and my community in all of this stuff. Now, one of the things, the bridge that I want you to cross is taking these kind of tax management planning strategies with these depreciations and Section 179s is, how does that actually affect my individual taxes? Okay, and in the last article I have down here, I've got all the tax rates. So if I'm able to write down my income on my business side of things by $1,000, and I'm in the 12% bracket, okay, I get a standard deduction of $12,500 as an individual and over $24,000 as a married couple, and possibly more if I have dependent children. Okay, and if I'm running a subchapter S, an LLC, a partnership, or sole proprietorship, what we were talking about last week. Okay, I wanted you to kind of see what other people were looking at as far as that, and you might go back to that forum and get some ideas there, because some of your classmates, they're on it. They found out some things, they researched, they used curiosity, they asked a question which led to a question which led to a question when they did their interviews. Maybe you didn't, but doesn't mean that it's not available to you. It's still up there in the next, just look up there in that forum. That information is right there for you, okay? So congratulations to those that really dug into that assignment. Man, oh man, I loved it. Okay, so what if just looking at $1,000 worth of deductions because of depreciation, I can at a 12% rate, I'm going to save $120 off of my taxes. Okay, that's what I would have to pay on that income, on that net income. All right, which may or may not be the huge thing. $120, big deal. Well, if it's $100,000 that I can deduct, you guys can do the math, all right? And that just means more income that can stay in your business, can pay your team, can pay yourself, and that sort of thing. So good luck with your research. If you find something, okay, if you find another article that even maybe explains this in a more simple way, a better way, or anything like that, well, attach it to an email and send it to me. I'll make sure that you get credit for that, okay? Some of you need a few points, okay? All of you A students, you know, you're the ones probably going to do this, and I certainly appreciate that sort of thing, but I would make this offer, 25 points to anybody that actually goes out there and actually reads a couple more articles, researches it. It's a couple clicks away. Why wouldn't you do it? It's kind of like, why wouldn't you manage your taxes so that you wouldn't have to pay as much income tax? Okay? So, have some fun, sit back, get in your recliner, wherever that comfortable spot is, put your night light on, get your highlighter out, and read some of these articles. I'm going to, later on in the week, post a quiz that will cover these articles, what I think are important within them, what could be important to you if you're actually planning on doing some tax management strategies and what-ifs through in your own business. So I'll have that posted, and I wish you, we've got a lot of things to be thankful for. I mean, most of us are in a line of work that we're working towards being something that we're really passionate about. Not everybody's got that. We get to be outside most of the time. It may not be if you're in school, on campus, that sort of thing every day, but we get to be around people that are excited to get up in the morning, and we get to live off of other people's energy and that sort of thing. So at least that's the way I think about it. I've been blessed all my life when I think about it, and being around you guys and gals, it's just a blessing to me. And so anyway, I'll report back in. I've gone 20 minutes on this thing. I can get, the older I get, the windier I get. You should have known me when I was younger. That's the only advice I can give you at this point. But if you need anything, give me a call. I wish you the best. And if you've got an income problem, as in i.e. a profit problem, then if you want to call up and you want to talk a little tax strategy, that sort of thing, I'd be certainly willing to visit with you about it. And maybe we can save you some money. Or you can just read a couple of these articles and do the same thing. So good luck. Have a great Thanksgiving. Give thanks where it's merited, and especially to the one that has put us here and given us purpose in all that we do.